Hi traders, and today I'll be showing us how we can use volume to increase our chart analysis and price predictions. Okay, so quickly let me make some explanation about the volume in relative with the price. One thing we have to note, first of all, the things we have to note when the price increases and the volume increases, is a bullish market with a strong momentum. What does that mean? When the price is going up and the volume is also going up, so it shows a sign of strength. Once the volume is high, so one thing basically we have to understand that you cannot dictate the trend of the market with the volume, rather the strength of the market. The volume only shows us what the strength of the market, not the trend. So if it's an uptrend, the price is going up and the volume is high, then it's a very strong what uptrend, very bullish. This signifies that the big players are in. Big players are institutions, because everybody want to trade when the institutions are trading, because the institutions, they have these influence in the market, whereby once they are in the market used to have a very high volatile move. So everybody want to cash out massively. When the institution put in their money, the market moves rapidly. So, and whenever the institution takes away their money, when they go short, the market shuts down rapidly. So there's always this strong momentum when there is a high volume in the market, and the big players are the ones bringing in these what high volumes. So when the price goes up, that is a trend. If there is a high volume in the market, is a very strong what uptrend. The momentum is very strong. You know that the volume is more like a fuel. It's fueling the what the movement of the what market. Another thing is when the price increases, an uptrend, and the volume goes down, it's still bullish, but it's just the small players in. So the trend is not that intensive. So the market movement, just look at the price, it might not be going increasing rapidly, so it might be shutting down little by little. So this is when the small players are in, institutions are not in. I believe you would not want to trade in this kind of market. When the price decreases and the volume increases, it's a strong bearish market. The big players are in, they are leaving the market. So it's a strong momentum. Like I said before, the market, the high volume makes what determine the momentum of the market. So when the price is what going down and the volume is high, the big players are leaving the market. And when the price decreases, the price is going down and the volume what decreases, is not a strong downtrend. The downtrend is actually light. It's not a strong downtrend. So that is the small players doing their own thing. So if there has been a serious downtrend before this downtrend, there might be a reversal in no time, because the downtrend is not that strong. So that means it's more players in. You might not want to trade this kind of market. Some other points to note: when there is a pullback in an uptrend and the sell volume is small, then it is a sign of continuity. When there is a pullback in an uptrend, there is a little pullback, and you look at the volume that caused the pullback, the volume is not large. It's a sign of continuity. That's more players doing their thing. And also, a pullback in an uptrend and the sell volume is big, it is clearly a sign of trend reversal. When there is a pullback in the market in an uptrend and there is a huge volume that caused that pullback, there is a tendency of what reversal to the what to the downside. Very important to note. When to stay out of the market, I need to tell us this: avoid trading during low volumes. With what I've said so far, it should be clear to us that you don't have to trade when there are low volumes. Because low volume means that there are little players, so anything can happen. The movement of the market might be most times going sideways when there are low volumes. Also, avoid trading when there is events or news releases. They could cause high volatility. When there are events related to the markets and there are news releases about the market, it influences our causes stirs sentiment and people's emotions towards the how they react about the market. So they might take some rapid decisions that might cause high volatility in the market. So avoid trading when there are events, and news releases about the market. Okay, let me take a few practical illustrations of what I've explained so far. I'll be using an indicator called the volume oscillator. Like we can see, there is a huge volume here that causes this upward movement. This is an uptrend. So there is a very high volume. Now let me go to the indicator. I'll be using a volume indicator called oscillator. Let me take away these volume bars and make some few settings about this oscillator. Let me change the color to somewhat white for clarity. Now, if we are using higher time frames, the input, if you're using higher time frames like 1 hour, daily, and all that, daily, we should be using something like 14 to 28 short lane and long lane. But if we are using something like 15 minutes or 30 minutes, uh, shorter time frames, you would want to set it to rather 5 to 10. So I need that to be illustrated, but let me use I think I'll be better with hourly time frame. For the sake of this lesson, let me just use hourly time frame. I need something that will depict properly what I'm about to illustrate. Okay, now I want to make a few examples with this volume oscillator. How this influences the market. When the volume is high, okay, this oscillator, let me explain something about it. There is a plot, as you can see, there is a plot, and there is a line, the zero line. These are two things you have to take note. Now, when the volume is above the zero line, is high. When it's below the zero line, is low. Now, when there is a high volume, there is a very strong trend. Now the volume is high. Look at this. You can see something. It's an uptrend. Now remember, the volume does not determine the trend, but the momentum of the trend. You can see there is a high momentum in this uptrend because the volume is high here, as you can see. Look at this one again. This trend, there is an uptrend here because the volume is high. I want to look out for some downtrend. Now we can see the volume is high. Look at this downtrend. Are we seeing something here? See the downtrend. The volume is above the zero level. See this trend again. See the high volume. The volume is high cause this trend. And this volume oscillator determines the momentum. So we have to consider other trade factors, something like a support and resistance line, and other price action to determine the direction of the market, trend line, and all. And another bonus indicator that I'll be showing us is the money flow index. The money flow index. Now, what does the money flow index do? Now, look at the money flow index. We can see there are two lines, the one above and the one below. The below line, once the market reaches the line below, this is when we say the market is oversold. There's a tendency of reversal to the upside. And when the market is reaches crosses the line above, then there's a tendency for a reverse. The market is overbought. So you will not want to trade when the market is overbought because there's a chances of reversal. and you would want to trade when the market is what? Immediately there is an oversold market, you can only go long. Considering other price actions, you can only go long. And whenever the market is oversold, you can only what? Go short. So this is a bonus indicator, volume indicator, that you might be considering while analyzing the volume. Thank you for watching this video. I hope it's clear enough. Comment on the comment section if you have any questions, and hit the subscribe button, like this video. So that is the only thing you can do for me to encourage me to produce more relevant videos like this. Thank you very much.